Imagine a massive silver bar teetering on a cliff edge, wind howling, investors below yelling jump or hold on. Prices just hit a record 66.50 yesterday, up a jaw-dropping 125% this year alone. But here's the bold paradox. At all-time highs, is now the perfect time to buy silver? Or should you wait for a dip that might never come? This could be your ticket to wealth, or a cliff dive into regret. Stick around as we unpack the buy or wait dilemma in this 2025 silver showdown. Let's rewind the tape like a cartoon flashback. Dusty footage, flickering screens, and over-the-top dramatic music in the background. Silver has never been a calm, well-behaved asset. In the 1970s, as oil shocks and runaway inflation rattled the global economy, silver went parabolic. Prices climbed from roughly $1.80 an ounce to nearly $50 by 1980, a staggering move of over 2,700%. At the center of it all were the Hunt brothers attempting to dominate the market, transforming silver into a high-stakes billionaire gamble that ended badly. Jump ahead to the 2008-2011 era. As the financial system cracked and trust in banks evaporated, silver exploded once again. Prices surged from around $9 to just under $50, a roughly 450% rally, as investors abandoned stocks and rushed toward hard assets. Now fast forward to December 2025. Silver is hovering near 66 an ounce, up about 128% from its sleepy 29 level at the start of the year. A quick reality check. This is its strongest annual performance since the late 1970s. Think of it like a meme stock everyone laughed at early on. First, it's ignored. Then it starts climbing. Suddenly everyone is talking about it, and you are left wondering whether you showed up too late or right before the real party begins. All right, let's lift the hood and look at what's really driving silver, nice and simple. Like explaining a weird game exploit that suddenly breaks everything. Silver's price comes down to supply versus demand, but not in a clean textbook way. This one comes with curveballs and sitcom-level chaos. On the supply side, miners pull roughly 835 million ounces out of the ground each year, about 7% less than back in 2016. Add some recycled metal from old electronics and jewelry, and that's the pipeline. Here's the problem. We are now staring at the fifth year in a row of shortages, with 2025's gap estimated between 95 and 117 million ounces. Think of it like hosting a pizza party for 100 people and realizing you only have enough dough for 80. Everyone still shows up. Things get ugly fast. Prices jump. Strap in. This is the moment where the cartoon storyline flips on its head, like a magic trick that goes wrong in real time. We're standing right in the middle of it now, the fifth straight year of silver deficits in 2025. Since 2021, cumulative shortages have piled up past 800 million ounces. Prices blew through $50 in May, ripped past $60 by October, and tagged a high near 66.88 just yesterday, before easing slightly on softer inflation numbers. Here's the eye-opener. Industrial demand hit an all-time high of roughly 680 million ounces in 2024, up about 4%. Solar alone now accounts for 29% of that demand, compared to just 11% 10 years ago. But there's a twist. Some analysts are quietly warning about a possible 2% demand pullback in 2025 if the global economy wobbles. Even so, the supply gap refuses to close. The deficit stays. This starts to rhyme with the Hunt brothers. Squeezed from the 1980s, except this time it S-ETFs. Funds like SLV pulled in billions, torching short positions as silver jumped 30% in November. Add a bit of humor to the scene. Wall Street traders sweating like they backed the wrong horse in a high-stakes silver race. Geopolitics throws fuel on the fire. Rumors swirl about China stockpiling. Mexico tightens exports. Not an outright ban, but enough to snap supply lines and push physical coin premiums up 10 to 20%. Now the real squeeze. If solar demand alone needs an extra 200 million ounces by 2030, industries may be forced to ration. And that's the problem. Silver isn't easily replaceable when it comes to electrical conductivity. There's no cheap stand-in. This isn't a temporary spike. It is the moment where the story crosses a line, where buying now or waiting becomes a decision that can define an entire portfolio. Now let's spill the bag and see what hits the floor. Loud, messy, and impossible to ignore. Start with the ripple effects. When silver stays this expensive, nothing downstream is untouched. Solar panels don't get cheaper. Costs creep up 5 to 10%. EVs, AI hardware, and high-performance electronics feel the pressure too. In theory, that should slow the green transition. In reality, governments step in with subsidies, mandates, and incentives. Demand doesn't cool, it gets redirected and reinforced. Europe IS clean energy targets alone are pulling massive amounts of silver toward 2030. EV sales crossed 20 million units this year, led by China's infrastructure push. AI data centers are multiplying fast, doubling their power and material needs to keep models like ChatGPT running around the clock. This isn't discretionary demand, it's structural. But here's the uncomfortable side effect. Inequality widens. Big players like Tesla lock in long-term supply contracts. Smaller manufacturers get squeezed. Prices rise. Consumers pay more for phones, cars, and tech. The metal quietly shifts power toward those who can hoard it early. Mining should be the hero here, but it isn't. New supply moves slowly. Environmental rules delay projects. Local corruption scandals flare up in places like Peru. Even when prices soar, it takes years for meaningful new output to arrive. By then, demand has already moved the goalposts. Zoom out to the macro picture. Global debt sits north of $300 trillion. Central banks keep printing. Inflation flares, cools, then flares again. In that environment, silver doesn't just shine amid shields. Up roughly 128% while stocks stumble. It's doing exactly what hard assets historically do when currencies weaken. But bull markets attract shadows. Fake bars surface, scams multiply. Premiums on physical coins jump 10 times 20%. Volatility cuts both ways. This is not a sleepy buy and forget trade. On Wall Street, miners feel the rush. Companies like Pan American explode higher, some up triple digits. Margins are enormous when silver sits above 60. But there was risk too. A recession could shave a couple of percentage points off demand, triggering violent pullbacks, even inside a long-term bull market. Geopolitics adds another layer. Russia and China push trading systems outside traditional Western exchanges. Pricing power shifts. Tokenized silver emerges on the fringe. ETFs absorb billions. Hedge funds stockpile. Retail investors scramble for what's left. Now the forecasts. Conservative targets cluster around $88 or $85 by 2026. Optimists talk $100. A few whisper triple digits. The logic isn't hype. It's cumulative deficits acting like a black hole, swallowing available supply year after year. But every boom carries a warning label. If prices overshoot, substitution pressure grows. Overmining eventually follows. Boom turns to bust. Silver has always moved in cycles. Brutal upswings, equally brutal corrections. So the decision lands here. Reasons to buy now. Deficits aren't closing. Industrial demand isn't optional. Solar, EVs, and AI don't work without silver. The gold-silver ratio still screams undervaluation. Inflation protection remains intact. Reasons to wait. Prices are high. Volatility is extreme. A recession scare could trigger a sharp dip. History rewards patience, but punishes hesitation too long. The middle path? Dollar cost averaging. Exposure without all-in risk. Participation without blind greed. Because here's the unsettling truth. Silver doesn't announce its final move in advance. Those who wait for perfect timing often end up watching from the sidelines as price runs away. In a debt-soaked, energy-hungry, AI-powered world, silver isn't a relic. It's infrastructure. Quiet, essential, powerful. So the real question isn't whether silver shines. It's whether you step in at $66 or wait for a dip that may never arrive. Drop your take in the comments. Buy now, wait, or walk away. Reasons to wait. Prices are high. Volatility is extreme. A recession scare could trigger a sharp dip. History rewards patience, but punishes hesitation too long. The middle path? Dollar cost averaging. Exposure without all-in risk. Participation without blind greed. Because here's the unsettling truth. Silver doesn't announce its final move in advance. Those who wait for perfect timing often end up watching from the sidelines as price runs away. In a debt-soaked, energy-hungry, AI-powered world, silver isn't a relic. It's infrastructure. Quiet, essential, powerful. So the real question isn't whether silver shines. It's whether you step in at $66 or wait for a dip that may never arrive. Drop your take in the comments. Buy now, wait, or walk away.